After being clicked just months ago, an ordinary email caused the Bangladesh bank to lose $81 million in a matter of hours. A single email set off a chain of events that led to one of the largest bank heists in history. How did this happen, and who was behind it? Let's take a look into the full story of the Bangladesh bank heist and uncover the secrets behind this audacious crime. The Bangladesh Bank, located in Dhaka, is the central bank of Bangladesh, responsible for managing the country's monetary and financial systems. On a seemingly ordinary day, a bank employee received an email that appeared to be routine. This email, however, contained a malicious attachment that would set the stage for a heist that would shake the financial world. The heist began months earlier when hackers sent a carefully crafted phishing email to employees at the Bangladesh bank. This email contained a malicious attachment, which, once opened, installed malware onto the bank's systems. This malware was designed to remain undetected, recording keystrokes and taking screenshots to capture usernames and passwords. The malware allowed the hackers to gain access to the bank's internal network, including the SWIFT, Society for Worldwide Interbank Financial Telecommunication, payment system. For months, the hackers observed the bank's operations, learning its procedures and identifying vulnerabilities. This reconnaissance was crucial to the success of their plan. On the night of February 4th, 2016, the hackers made their move. Using the credentials they had stolen, they accessed the SWIFT system and sent 35 fraudulent payment instructions to the Federal Reserve Bank of New York, requesting transfers totaling nearly $1 billion. The payments were directed to accounts in the Philippines and Sri Lanka. The hackers used advanced techniques to cover their tracks. They disabled the bank's printers to prevent printing of transaction logs, which would have alerted bank officials to the unauthorized transfers. Additionally, they used the credentials of high-ranking officials to make the transactions appear legitimate. Out of the 35 transactions, 5 were processed, amounting to $101 million. However, the Federal Reserve Bank of New York flagged several other transactions as suspicious due to anomalies in the payment details. One notable red flag was the use of Jupiter in the payment details, a term associated with a sanctioned entity. The Federal Reserve sent a query to Bangladesh Bank, but due to the time difference and the hackers' manipulation of the bank's systems, the warning went unnoticed for critical hours. This delay allowed the hackers to execute their plan without immediate detection. The next morning, February 5th, Bangladesh Bank officials discovered that the SWIFT printer was not working. Assuming it was a technical glitch, they attempted to fix it. As they worked on the issue, they began to realize that something was terribly wrong. When they finally managed to access the SWIFT logs, they found the unauthorized transactions. Panic set in as they realized that $81 million had been transferred out of the bank's accounts. The stolen funds were transferred to accounts in the Rizal Commercial Banking Corporation, or RCBC, in the Philippines. From there, the money was quickly moved through a complex network of transactions, including conversions to pesos and laundering through casinos. The use of casinos was a strategic move, as they are known for having less stringent money laundering controls. The complex money trail made it difficult for investigators to trace the stolen funds. However, they managed to recover a portion of the money through cooperation with international financial institutions and law enforcement agencies. The heist triggered an international investigation involving multiple agencies, including the FBI, the Bangladesh Police, and the Philippine Anti-Money Laundering Council. Initial findings suggested the involvement of the North Korean hacking group Lazarus, known for other high-profile cybercrimes. Despite the thorough investigation, much of the stolen money remains unrecovered. Several suspects were apprehended, but the masterminds behind the heist have not been brought to justice. Legal battles ensued, with the Bangladesh Bank suing RCBC and other entities involved in the money laundering process. Several bank officials and intermediaries were convicted of money laundering, but the financial impact on Bangladesh Bank was significant. The heist also highlighted the vulnerabilities in the global financial system, prompting banks worldwide to review and strengthen their cybersecurity measures. The Bangladesh Bank heist exposed significant weaknesses in global financial security systems. In response, banks worldwide have enhanced their cybersecurity measures, implementing stronger authentication processes, better monitoring systems, and regular security audits to prevent similar incidents. The heist also served as a wake-up call for financial institutions to invest in employee training and awareness programs to recognize and avoid phishing attacks. The Bangladesh bank heist remains one of the most significant cybercrimes of the 21st century. As the financial world learns from this incident, it serves as a stark reminder of the ever-present threat of cybercrime and the need for constant vigilance.